Good day, everybody. Assume you can all hear me. All right, so I hope you guys are all doing well. The new home sales data coming out. Nobody really cares. All right, guys. So today's webinar is talking about. I'm just jumping right into it. Per usual, if you have any questions, fire away. I'm always receptive to a question or seven. If you want to know what's in your VW, don't ask me. Nobody knows. But other than that, we're doing well. All right, guys. So now that was one question. Okay, so we're gonna. It's entitled "Back to Basics" here. My idea is that we're just gonna add value by simplification, basically. With everything we're looking at, it's a complicated trading environment. You know, I think the tricky thing with this is that there's big moves. You know, stuff's moving every day. That's the great thing from a trading aspect. It's difficult though to develop a sound bias that's sustainable on any level, isn't it? Because, you know, one day the commodity currencies look great. The next day they're getting absolutely hammered. Then the euro is all of a sudden the flavor of the week. Then it's not. You know, then gold's on fire, and all of a sudden platinum went up just crazy yesterday for really apparently no good reason, but silver's lagging. I mean, it's an interesting world we live in. There's a couple of things that remain true here. So I'm going to try and just sort of add value and simplification. And I wanted to, I said here, in this webinar, David will demonstrate how support and resistance across multiple time frames to predict the future, blah, 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 blah. So I want to do that. All right. And I want us basically to shuffle through a bunch of charts and just pick out what looks expensive and what looks cheap. All right. And where it would look expensive and where it would look cheap. At the end of the day, and this for some of you might be actually at the end of the day, that's really the whole crux of trading, isn't it? Is what's expensive and what's cheap. And said differently, what's middle trading and what's trading at the extremes. And what I mean by that is, I think there's a quote, and obviously this doesn't apply to us here, but I think there's a quote where Jim Rogers says that a trend, what's he say? You know, you get trend changes not every few months, but every 10 years. And obviously that doesn't necessarily apply to us in this environment, but there's some truth to that in many respects. I'll find it. I have it saved. Anyway, okay. So let's take a look at pound. All right. Let's start with the pound dollar. And remember a couple of things that constitute support and resistance. All right. Number one is obviously visually. Visually, we have support and resistance, don't we? In terms of just what's to the left, okay, across a daily, etc. Thank you, Dave. I appreciate that. All right. I mean, don't just give out likes frivolously. So my point being is this. What are the types of support and resistance we have? One, just visual. All right. In other words, what's to the left of the chart? You know, in the pound, it's pretty obvious. I have a lot of lines on here because it's a range. You know, if it's an overall sort of trending pair, you're not going to have as many lines on the thing. All right. Number two, fibs. All right. And these are probably in order of precedence or importance. All right. And number three is, we'll give them pivots. And number four, I'm going to put correlation, support, resistance. What do I mean by that? Correlation. Sorry, it's actually not as easy writing with a mouse as you might think. Okay, so what is correlation, support, or resistance? Right. If the euro pound is way up there at resistance, or at at overlapping resistance way up in the hemisphere. All right. The implication there is that the euro is likely to drop and the pound is likely to gain relative strength to the euro. Okay, relative strength to the euro. That doesn't necessarily mean that the pound is going to gain strength, cable specifically, relative to the dollar. But it does mean that if there's going to be a pound-related move, it's probably going to be on the relative strength side rather than the weakness side. Or said differently, if you want to short something relative to the dollar, the euro is the better bet. Okay, so if you are trading the pound, you should absolutely be looking at the euro pound as well. It's the same as if you're trading the Aussie dollar, you should be watching things like the euro Aussie. And obviously the dollar itself seems to be less important these days. All right, so watch support and resistance from a correlation standpoint as well. All right, now, if we're looking at this pound, and I'll clean this up a little bit. Okay, here's a monthly chart. Bear with me. I know there's a lot of lines in here, but I don't want to remove them necessarily. What is the overall theme here for a pound? I mean, it was a massive range, and it's a monthly chart, so let's not get crazy. Yeah, it's rangy. All right, it was a range up. We broke out of it and then cruised above it a little bit, broke below it, and then failed to break below sort of 140 basically. All right, so it's a range for all intents and purposes. All right, that's something to keep in mind. The other thing to keep in mind is, why would it be a range from a fundamental standpoint? Well, the UK economy, the Bank of England, and Grandma Yellen, they do things pretty similarly. I mean, they tend to, the Federal Act and then the BOE will act. I mean, just on a slight lagging sort of way, but for the most part, Grandma and Bank of England, they do things in alignment with each other. All right? So it's no wonder that the pound, for all intents and purposes, is a range. Okay? So we can also narrow it down to even sort of a slightly different range here, isn't it? I mean, that looks like range material there. And then it sort of steps up to sort of a secondary range above it, if that makes any sense. So we have these sort of phases of consolidation here. So what would be support on the pound? Well, bunch of swing highs there. Look at this, a weekly chart. Look at how many candles could not break this level. So here's 1, 2, 3, 4, 5, and then a sort of a retest of it and a push about. So 6 weeks was hung out at this 150 level, which also happens to be the psychological level. And if you go back, obviously it's been massively important prior to. Oops, sorry. Look at all this stuff, right? So said differently, what would be the obvious sort of support level for the pound? Well, sort of 150 to 148. And the obvious resistance level for the pound, kind of this stuff here. David, that's a big range. Yes. Yes, it is. So what have we done here, basically? We have identified the likely extremes for the pound, have we not? So if you're going to do the majority of your trading on the pound, where would the majority of your trading likely be? Well, probably around 157 to 159 and 150 to 148. So said differently, if you were going to do, if you came across your trade journal or look back on your trading and you had 6 longs in this area versus 2 shorts, you're probably doing it backwards. And said differently, if you had 5 shorts here and 1 long in the green zone, you're probably doing it backwards. Now I'm stating the obvious, but I've made these mistakes. Okay, so my way of looking at this is that if I'm in this extreme red zone, the only thing I'm doing is looking for shorts. And said differently, if I'm in this green zone down here, the only thing I'm doing is looking for the buy side. All right? Doesn't that simplify things a lot? And what have we done really? All that we've done is essentially identify what are we doing. We're in a range, and where's the extreme on the sell side and where's the extreme on the buy side. Then it's a case of, okay, well, maybe I need, maybe you're one of those people that just says, great, I'm going to put an order in here, I'm going to put an order in here, and an order in here. And hopefully it does sort of something like this. Flip it around, back into the top of the range. Okay, short, short, short. And that's ultimately what I'm looking for here. Okay, I'll say differently, you look for your little spot trade entries in here, but this is your hot zone is what I'm saying. This is your hot zone. And I'd be doing nothing but looking for buys in that area. Okay? Or looking for sells in this zone. So this is an approach that you can use. Dave, once you've done it once or twice, it's like making a hard tackle in rugby. That's all you want to do. Yes. It's all you can dream about. All right. So this is something that I like to do for see, I don't, it's so, the market's just so fickle, the euro specifically is bizarre to me. We've been doing this almost 10 years now, and there are very few things that surprise one, but correlations out there. And if you remember, we were looking for longs on the euro since like 105, but it went all the way back to 117. I mean, that trade kind of worked. And the Aussie I've been bullish on, but the commodity trade's sort of unwinding a little bit, so it's going to take a long time to base out. So it's one of those things where you got to trust it almost to a fault. It's difficult. The best thing that's working is obviously shorting the stock market, but even that we need a little rally on. All right, so let's talk about, let's move on to something else. So that's the pound. All right, let's move on to something that's arguably been in a trend. Let's look at the Australian dollar. Now, today Caterpillar came out with they're going to drop 5,000 jobs in a restructuring, and they missed they're guiding down on their yearly estimates. They're going to miss by $1 billion. They're going to make 48 billion and not 49, I believe is what they said. Thanks, Trade the News, for that. All right. Now, I don't know the first thing about Caterpillar. All right, I'm not going to lie to you. And if there's a global sort of deflationary cycle, I know that Caterpillar is likely to suffer. But they make big things and paint them yellow. Right. Now, but I know that Caterpillar as a company isn't going anywhere. Okay, it's the same thing as VW. I know this is a major crisis, and I don't know what it's trading at today, but it was trading at sort of mid-20s yesterday. If it goes down to like $5, If it goes down to like $5, that company is not going anywhere, isn't it? It's probably a good buying opportunity. All right. My point is this. Is the Aussie dollar going anywhere? Is China going anywhere? Is India going? Is Mexico going anywhere? No. All right. So as bearish and as crummy as Michael is, this stuff isn't going anywhere. China's still growing at 6%. All right. That may not be the 8 and change that they were a year ago, but they're still going at a pretty hefty clip. Relative to where they were, yes, they've slowed down. All right. So never forget this in your trading. Never forget this in your trading is that the news cycle is always going to lag what the reality actually is. On both sides of it. It's going to continue to be bearish longer than the instrument is bearish, and it's going to be bearish after the instrument's bearish, and it's bullish, and the same on the bullish side because they're reporting news. So I don't think that the emerging markets are as bad as they are being represented right now. I mean, the South African rand is just getting absolutely lit up like a Christmas tree. Now they don't have things like electricity and stuff down there, but I don't think it's 14 rand to the dollar bad. Some electricity would be nice, but it's not. There's no ways it should have lost 40% of its value in 6 months. And it's the same for me on things like the Aussie dollar. The Australians have it together. They know what they're doing down there. Brazil as well, yes, absolutely. Okay, so my point is this. When one looks at this and you start to see analysis come out from folks that are saying, yep, it's going to be 57 cents by such and such. And it's going to be, they're talking crazy numbers. That's when you know that all semblance of rationality have gone out the window completely. That's a pretty good sign that you're getting closer to where there's going to be a meaningful bounce or a meaningful buying opportunity. And if we look at this, 110 was preposterous, by the way. 110 was just out there on the buy side, way overboard. But this is effectively a 50% discount. If your better half went into Macy's and said that there's a 50% sale on summer dresses, you'd probably think it's a pretty good deal. All right? And for you and I, we'd go, yeah, the Mercedes is selling their new C63 at half off. We'd go, deal. Let's put it in context. All right? So my point is that I don't think this Australian dollar is as bad as it's been represented. Is it trending down? No question. All right? From a price action standpoint, this is lower lows, lower highs. Absolutely. Distance to this 21 on the monthly has got a little bit crazy. But now here's the thing. Where would an extreme be? Look, support, massive consolidation. Yes, you broke this trend line with really only a moderate bounce. I was kind of surprised by that. I thought we'd hold that for longer. Support. And we've got some stuff through here too. So this zone, to me, is a big deal. And yes, it goes down to 67. Okay. Now, let's go to the weekly chart and try to make a little more sense of this. Actually, let's stick with the monthly for a minute, if I may. So, on this basis, where would the extreme side be? Yeah. The only thing you've got to be careful of is capitulation in these things, That can happen where you spark down for half a day and it's 320 pip down and it never closes below that for the next 6 months. Okay, and where's the extreme on that top side? Well, I would imagine it's sort of through here, isn't it? So the 77 to 80 cents. Why? Well, notice how you sort of, I mean, anybody can see this stuff, right? This isn't you and I coming up with rocket surgery. You just look at the chart and say, right, there's a high, there's two, there's one, there's one, there's one, there's one, there's a low, there's a low. This is a retest zone. This is a massive consolidation area for about 5 months. These areas matter. Why is this zone support? Well, it's this stuff, isn't it? So what would we expect on a weekly basis? We'd probably expect us to we probably expect us to zigzag our way down here, consolidate for weeks, and make our way back up here before forming this base. Right? I mean, would that be a reasonable expectation? The news gets ahead of itself. The Australian, there's still a yield situation going on there. Do you know what the 10-year was trading at today? 2.1 percentile here in the US and days. 2.1 percentile. Inflation is just below that. All right? So in other words, people are going to look for this at some point. Okay. So what would a basic, let's go to the daily. What would a basic overbought, oversold scenario look like on the Aussie? How about sort of something along these lines? And then up towards that zone we're talking about. So in other words, buyer, buyer, buyer. Seller. Okay, now, here's the thing. Okay, and this is, I cannot, if you listen to nothing else during the course of this webinar, this is worth listening to. If you have hit an extreme, and the extremes are not difficult to identify as I'm demonstrating. Okay, if you hit an extreme, it's often very difficult to continue to short or long in the prevailing direction that it was going after hitting that extreme. And I'll clarify that in a minute. Okay, you need a meaningful retracement after that. It's a good lesson. All right, so here's a little basic sort of Aussie plan. All right, now the question then is, but David, what about this whole area here? That's a lot of trading going on there. Yes, it is. And the thing is that if if this is our extreme zone down here in the 68 to 67.5 zone, you can continue to look for shorts as long as you haven't hit that area. However, once you've hit that area, you expect that to be enough mojo to take it back to this sort of extreme overbought zone within the context of the downtrend. All right. Now, so what would my bias be in this area? I would look for longs, and I would only take buy positions. And when I'm up here in this red area, I would only look for sell positions, or said differently, offset the buys. Okay, does that make sense? So in other words, if we're looking at the 4 hour, it's likely to look sort of something like this. Hiccup, down. Okay. Actually, let me scoot this over. Do you want me to explain how all those lines are generated? Right. Support, 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 support. A little bit of resistance, 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 resistance. 21 EMA, and you can also see that visually just looks like a 382. All right, but moreover, you've got all this stuff here. Okay, so that looks like resistance to me. All right, so we bounce. Turns out to the first little level. Scoots up to the top again, all the way down to the bottom. Test these lows. Finds a little bit of support, maybe goes right back to where it came from. No, a little lower high, rejected, down to that zone. Now we start the consolidation process. All right, a little change of trend. Back it goes to that same zone. All right, and scoots up. You're going to see this a lot, guys, where you have to go through that sort of neutral period. And you have to go through that sort of process where this would look like a continuation flag. This is how these things form. All right, notice. Okay. So that's what the lesson here is, the lesson here, moreover, is determining the extreme ranges to what you're trading. All right, so let's look at a Euro Aussie scenario here. S&P's just getting its bell rung. Hello, my name is the S&P's. I'm getting my bell rung. You know what Mike Tyson used to say? Everybody has a plan until you get hit in the face. All right. He's a profound man. Genius. All right, so here's a Euro scenario. Okay, coming off my other favorite one, just coming up. I think he's coming off a fight, and he goes, this interviewer says, "Did you hurt your back? Or did you hurt yourself?" And he goes, "Yes." And I said, "What? You got a sore back?" He goes, "Yes." He goes, "No, it's not my back, it's spinal." Classic. I broke my back. It's spinal. Sorry. All right. Go on YouTube, but it's funnier than I represent it to be. Okay. So here's the Euro, and it's a tough situation because I still think that there's a couple of little banking issues going on in the Eurozone that they're not necessarily representing yet. But I think that there's some skeletons left there. But it's coming off this trend line and holding. But it's the way that trend lines interact on this sort of level is as follows. Here's your trend line. You tend to do sort of something like this when you come and meet them. Immediate bounce. And then you kind of come back down to them and you wear them out for a while. And you form that base on the trend line. Oh, I'm sorry. Is that better? Testing 1, 2s, and 3s. All right. So, if anything, we're kind of in this little phase here, I think. Sort of in this period of that. Right? Now, let me do this. here is a Euro Aussie chart. I bring this up because I think on the long term, the Euro Aussie is going to be, the Australian dollar will be stronger. And it just depends where you take this to. Maybe there, just because there's a few touches on the bottom side of it too. And that gives us that one. All right. And then, the bottom looks like this. Okay. And then obviously we have very obvious sort of support here, and it stretches up here and whatever. Okay. And then there's some interim goodies through here. Look. Lots of things there. Plus this test. Okay, now. This is important because of that correlation support and resistance I talked about earlier on. Right, so let's go back to this euro action. Now, does this look bullish here? It's a weekly chart. Yeah, it's a good question. It's a good question because I've been looking at the peso and the CAD a lot. So let me finish up with this thought and we'll run over there. We've got 15 minutes. I won't forget it because it's a good point. And it's very difficult. It's very difficult to determine for things like the peso, the peso, the CAD to a lesser extent, but the CAD's got the oil thing and so does the peso. It's difficult for those pairs, South African Rand, just because there's no precedent, They're just in no man's land, and it's difficult. All right, now, is this euro looking bullish to you on this weekly chart? Probably not. But it's bullish today. So the question is, and in the same sort of the question is in the same breath as we had before is, where are extremes? And if we're going off this little model of how things bounce off a trend line and base out at them, where are we? If anything, I think we're kind of in this phase. In which case, we're likely to have something like that going on one more time. Okay, now. So, where is resistance here? Obviously up there at 118, it's pretty obvious. But that's way up there, man. That's 700 pips in the context of this market. Not feeling it. All right. And said differently, where is the low side here? 107 to 105. The high side, 116, 115 area. How is that determined? Well, people bought here before. It's that trend line, it's visual. And how about the top side? Well, people sold there before in an extreme. Right? So in other words, if I'm going to be a euro seller, maybe 115 and change to 117 would be my zone. I know that's 150 pips, but you can boil it down after that. What I'm trying to say is that the whole point of this exercise is we're working out our sell and buy zones. If you remember last month, we talked about what's the way the major river is flowing. Well, here we're determining where the major river is. And if you lose money selling in the zone and you lose money buying in the zone, it's okay. I'm fine with that. I would continue to do that over and over and over and over again. Because that thinking of buying at the extremes and selling at the extremes is going to put you in good stead. And if you find yourself getting chopped up in these areas but being right retrospectively, then the way you're trading it needs to be looked at. And Maverick's right. It's having the conviction and the discipline to wait and do it. It's difficult because it's going to be in your face like the Ozzy is right now, in the facial at the moment. It's difficult to even get your head around it. Okay, now the reason why I pointed out the Euro Aussie is this: if the Euro Oz was up here at the same time that the Euro is sitting around, say, 1550, 16 hundo, what's likely to happen here is that, that's red zone. May not go all the way to the bottom again, but at least sort of circulate down and want to do something like this, possibly. That's a mega move. So if you have Euro Aussie sitting up there in the 68, 69 handle, and you got the Euro dollar sitting at 16.25, and you got the Aussie at 67.50, there's likely to be a little paradigm shift for maybe 3 weeks. Well, that information can make you money. It's 3 trades, basically. And maybe you don't short the Euro dollar, but maybe you short the Euro Aussie and buy the Aussie dollar. Or maybe you short the Euro dollar and buy the Aussie dollar. And effectively what you're doing is shorting the Euro Aussie, but you're not opening yourself up to that crazy volatility maybe and higher margins and things. So there's different thinking there. All right, now let's address that question on the CAD and the peso and things. I hope this is making some sense to you guys. I'm trying to illustrate just how my thinking works in terms of waiting for the major sell and buy zones and then getting active in between, and trying to simplify in what really is a fairly confusing environment. I must have sent out on my twit like 5 times 2020 sell on the S&Ps for about 1740. I think it's working. But this opens itself out to this too. Thanks. All right, so let's talk about this CAD situation and peso situation. So the Mexican Central Bank has their rate set at 3%. They just came out with a rate statement. When was it? This week? And they talked about labor market problems, lagging labor market, deflation, etc. But they held rates at 3. Once again, there's yield there. I was just reading all kinds of articles about Audi moving in a huge factory there to build their Q5 and Q7s. I mean, the auto market down there is crazy. Once again, I don't think it's as bad as 1730 represents. All right, this is something to think about. Now, the peso, along with the other developing market currencies, emerging market, it's more PC. I'm nothing if not PC. There is still serious oil correlation because oil represents deflation or inflation, doesn't it? I mean, it really does. So although we kind of flat here and a little rangy, it's still on its face. But in the same token, where would the extreme be on oil? Well, something like this. Resistance. That's the 50 and change area. And why would sort of 39.40 zone be important? Well, I think that's less likely. I don't know. But the bottom line is it's sort of this late 30, early 40 zones. Okay, and the top side of that is 54. So why am I talking about this? One, we have to identify extremes. If I'm a buyer on oil, it's going to be 38, 39 zone. If I'm a seller, 52 to 54. The in-between stuff's noise. All right. I'm bringing this up because of the prevailing correlation. In other words, if we look at the peso, here's a monthly chart. I know it's a monthly. Let's not get crazy. Let's not get ahead of ourselves. But look at the distance to this 21 EMA. It's preposterous. This thing went from 14 to 17 in, I don't know, 1, 2, 3, 4, 5, 6 months. Look at the South African rand there. Okay, it's difficult, but it's just I know this chart's a little funky. I mean, it's gone from 10 to 14. That's 40% in 1, 2, 3, I don't know, year. Crazy. Okay, big time. Especially, it's one thing on the downside. It's a whole different story on the upside. You know what I mean? On the upside, it's like it's just not necessarily how things. Okay. Jammed up there for a minute. It's not necessarily how things work. All right, that chart's broken. So let's go back to this oil thought. Now, when you have something like this going on, where common sense would sort of dictate that this is overdue and then some for something like this. How do we time that? Since there's no precedent for this. You look to the left and we're in no man's land. You've got a couple of things at your disposal. One, your gut. Two is, David, that's scientific. I'll take that to the bank, thanks. Two is the correlation. In other words, when and if oil goes down here to, say, 38 again, 39, it's very likely you're going to bounce like this just from a short covering standpoint. That will absolutely benefit the Mexican peso and the CAD. All right? When you're at these extremes, then it's a good time to maybe watch, okay, well, the peso is at 1730, 1740. I'm ready for that retracement. Then maybe you can start to look at the price action stuff. What are we doing on this daily chart? Well, we made a consolidation flag at the high. It's broken above that. Oil's at the support. Okay, I'm ready to short back through it. Now if it did sort of something like this and had broken out, no, that's probably a situation where you're going to step up. But a continuation flag essentially at an extreme and then a break above that, that's normally a very good shorting opportunity with limited risk. And this is how Paul Tudor Jones would trade a lot. Essentially is picking out continuation flags at extremes and then selling the breakouts. I like that strategy. All right. So for timing already very overbought things at extremes, watch for correlation on stuff that has support and resistance to help you. That, and then use your price action. That's the best advice I can give. Because otherwise, it's so difficult to determine. And I'll be honest, took some shorts through here, sucking right now, not feeling so great. And it's my fault because we selling after a support bounce. And I know better than that, but I figured that we'd step down one more time. But anyway, just now sitting with it. and I'm still expecting kind of this move. All right, the CAD to the same extent. Where is the CAD? You know, just looks short. Once again, I just watch for correlation on the oil. Let it sort of come up, and then use your price action and try to take it back down to this 28 zone from, say, 36. That kind of thing. You know, and then probably check, roll the way back up there and go again. It's not just going to slice right through that unlikely, but it does look like a little bit of a freight train. So maybe kind of something along these lines. It's difficult. And I'm not sure I answered that question because I'm not sure that it's not the sort of question that's easy to answer because there is no precedent for it. You know, it's one thing to look at, you know, the CAD you can look at here and go, okay, I get, you know, CAD, I got something to work with. I got stuff here. I have a hunch that looks like something that wants to shove itself through the roof and then, okay, no. You know, we've seen that scenario before. But when you're looking at a peso that's in the middle of oblivion, it's very difficult. You know, even something, you know, my other thing is it's okay to stay away from it for a little while until it sort of meets your mind's eye. You know, here's one that works. Yen. Why does it work? Well, it's rejecting this. Has it come off support? Yes. You got a little divergence there. And we got stock market developing the way it's developing. Easiest trade this year has been the S&P, honestly. Difficult to stay in, not difficult to pick the levels. You know, how about sort of something like this? Just pick up these highs. Pick up those highs with the S&P retesting, say, 1980 or something, 1960. It's a thing of beauty. You know, and then chase that down towards 114. When will the stock market recover? I don't know. I mean, the level, I know I'm out of time. I had 1740, 1720 in mind. I had sort of something in this range. You know, a little gradual step down here, base out, go back to where I came from, range around for the next 2-3 years. Yeah, I mean, said differently, I'm just looking for sells until we hit sort of this zone. So I'd love to see kind of something like this. You know, my trade here is a short on the S&Ps around 1970, 1980 to 2010 zone, along with a USD in short around 120, 150, 122. All right, guys. Well, I hope you learned something. I mean, identify those extremes in your trading. I've mentioned it before. It will help you. I know it will. All right, and then do the majority of your trading in the direction of the extreme, obviously the other way. It's a contrarian way of looking at it, but maybe it helps. All right. And as always, I can be reached at ForexDavid on my twit, ForexDavid. And if you have any questions, that's a good place to reach me. All right, guys. Thanks, everybody. And we will see you next month. Cheers.